Yeah, and what's kind of interesting about Bitcoin is, so I've been basically watching it since 2010, and I've gradually shifted from kind of interested skeptic to highly convicted for it, and thinking it's not only is it a good thing, but it's likely to be ongoing successful. And so in the early phases, I was saying, well, I mean, that's a neat concept, but can anyone just copy it? Can we just have 1,000 different Bitcoins? And so, maybe there's only 21 million Bitcoin, but there could be any number of coins, and they're probably just all going to dilute each other. So that was like my first concern. The other thing is just, are the incentives going to work? Is this thing going to eventually get centralized and captured, or is it actually a clock that never, it's like he set it in motion and it just kind of goes forever without ever being captured? Is it that well designed? And I think what kind of Bitcoin's price and liquidity is it climbing through that test? Basically, it's had almost 15 years now of people testing it. How robust is this thing? Is it getting captured or no? Is it workable or no? Can you copy it or no? And money is a network effect good. A lot of economic literature would describe it as the most saleable good, which is similar to liquidity in the sense that even if someone just copies Bitcoin, it's kind of like trying to copy Facebook. You could theoretically copy all the code and run a parallel Facebook, but your new Facebook is so less valuable because people are already on Facebook. Facebook has the social liquidity that is very hard to move over. And so Bitcoin has people using it, people running node, miners mining on it, so it's more secure, more costly to attack. Any attempt to copy Bitcoin basically makes an easier to attack version from the start. So it's just a worse product from the beginning. And so really it's just being tested. And as it kind of saturates a certain type of liquidity, it can then appeal to higher levels of liquidity. So for example, when Bitcoin had $1,000 a day in trading volume, someone couldn't just ape in with $1 million. When it had $1 million in daily trading volume, someone couldn't just ape in with $1 billion. When it had $1 billion, which now it does, billions per day, you can't just ape in, sovereign scale balance sheets or like big BlackRock scale balance sheets can't just ape into it still. It has to kind of achieve a certain amount of liquidity before it's even on the radar for larger pools of liquidity as being a monetary type of good.
Money is fundamentally broken and Bitcoin is the answer to it. That's the message out from Lyn Alden. Lyn Alden is a distinguished economist and often doesn't receive the recognition she deserves. She has gone from a Bitcoin skeptic to Bitcoin now being her #1 asset in terms of future investment potential. For those unfamiliar with her, Alden is an investment strategist and financial analyst, renowned for her proficiency in macroeconomics and equity analysis. She is the founder of the Lyn Alden Investment Strategy, a financial advisory firm, underscoring her extensive knowledge and expertise in the field. In her latest interview, Lyn broke down exactly why Bitcoin is the #1 asset she's bullish on looking into the future. Make sure to stick around to the end of the video where Lyn explains why Bitcoin has passed the event horizon, and because of network effects, no cryptocurrency could come and take its place. Also guys, I have just launched a daily 5-minute crypto newsletter. I was so sick of seeing people charge hundreds to thousands of dollars per month for on-chain crypto data and breakdowns. So to give out as much value to you as possible, I'm sending out a 5-minute daily newsletter which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know all in a nutshell. And my promise to you is it will be completely free forever. Click the first link in my description, enter your email to join over 5,000 others in becoming a better crypto investor right now. If you don't like it, I will personally send you $1 whole, so you literally have nothing to lose. Now here's Lyn Alden with her Bitcoin prediction.
And then it's also being tested in the technical sense. Basically, there have been some bugs in the past. Bitcoin has 100% uptime since 2013, well over 99% uptime since inception. There have been occasional undiscovered bugs that get fixed before they ever have a problem. And that's kind of one of the debates now, which is how quickly should Bitcoin change versus how should it ossify? Because it's one of those systems where it is technically upgradable, but it's only upgradable in a distributed way. People have to, no entity can just push updates to users. Users have to basically pull updates into themselves in a way that's still backward compatible. And the system's just overall being tested and so far in the process of being monetized and being increasingly useful. And of course, the bigger it gets, the more developer funding goes into it, the more people start up businesses and say, okay, here's this problem, I want to solve it. I want to have this better UX. I want to solve this other problem with Bitcoin. I want to solve this problem for Bitcoin. And so you have an emerging ecosystem, which is pretty powerful. Yeah, it's kind of like saying no matter how many pesos Argentina prints, it doesn't really affect the dollar. It's basically the decentralized version of that, which is that no matter how many Dogecoin exists, it doesn't change the fact that Bitcoin has the security and the depth of liquidity and developer ecosystem and various ways of measuring a network effect that are not present. And importantly, chain money never is also more secure, right? More valuable because the costly it is to hack it, to try to do a 51% attack, capture hash rate and censor it, for example, is harder the more valuable the network is. And so when you clone it, you not only do not have any liquidity, you also lack the security. And so it is a environment where money tends to centralize around one or two. Is that the liquidity pools together in a similar way that social media will pool into some big silos. We're kind of seeing the same thing with these monetary networks. So I think there are three main paths. One would be central bank digital currencies, which is basically that governments want even more control and centralization of their ledgers. That's kind of path one. Path two is things like stablecoins, where this technology creates more global competition of money and assets, right? So, money is a marketable good, assets are marketable, but because there's 160 different currencies in the world, they kind of have like financial walls around them. They kind of purposely protect them from competition in a way. So for example, if you're in Argentina and you're middle class, maybe it's hard for you to get dollars. Maybe it's hard for you to get shares of the S&P 500, whatever the case may be. Unless you're wealthy, well-connected, it's kind of hard to go offshore. And even then, countries can just block you from leaving. So when we think of how money gets in or out of a country in the current system, there's really two main methods. One is bank wires, but those are controllable by the government. And the other one is ports of entry, which again are highly controlled by the government. Whereas what this technology does is it just pokes a million holes in those financial firewalls. I could hire a Nigerian graphic designer and she can send me a string of numbers and that I can pay her. And it just goes around the Nigerian banking system. She can show me a QR code over a video call like we're having now. I could pay her over the call and it just goes around her system. Or you could memorize 12 words representing your private key for an asset or either a stablecoin or a Bitcoin. And you could bring $1 billion through an airport just by writing that down or memorizing that or having that encrypted in the cloud somewhere or any number of methods. The value density is infinite. And so money can now get into and out of these borders a lot more readily, which has implications if you're a small and undesirable financial bubble. Basically, that your ways of keeping people and their value in there and constantly inflated, diluted, controlled is weaker now. And that, of course, the more people are aware of the technology, the better the technology gets. The global competition for money and assets, even the centralized variety like dollars or gold, and this exists, you can make a gold-backed stablecoin based in Switzerland, and that can pierce into all these different countries too. Basically, you can have a hub in a stronger jurisdiction that pierces into weaker jurisdictions. As long as those stronger jurisdictions are fine with that, it doesn't matter if the weaker jurisdictions are fine with it or not. It's really just about, where it's based and what assets it's holding. And then the third method is basically Bitcoin, which is the fully decentralized version, where even those stronger jurisdictions can't necessarily do much about it. China famously has quote unquote banned Bitcoin mining multiple times. It never really stuck. In 2021, they were more aggressive about banning Bitcoin. This one actually kind of stuck. And so, in a week's time, half of the Bitcoin network hash rate went offline. And if you looked at Amazon or Microsoft and said, okay, well, you have to move internationally your server system next week, you can imagine the uptime issues that they would have for months or probably a year as they figure out how to reassemble all those assets elsewhere. Whereas Bitcoin had 100% uptime. It just slowed down for a couple weeks until the automatic difficulty adjustment kicked in and reset the network back towards its normal speed. And so it was fully workable. And then just like a swarm, the miners just reassembled themselves elsewhere in other jurisdictions and actually became more decentralized because of that. And then ironically, something like 20% of the network reemerged in China. So China's still a mining jurisdiction. And if China has trouble banning something, that's usually a high signal thing to pay attention to. And so as I think some of these Western developed countries experience things like sovereign debt crises and things like that, Bitcoin is an asset that is, I think, worth understanding, both from a technical level and from an economic level. It's really three paths ahead. There's central bank digital currencies, there's centralized global asset issuers like stablecoins, and then there's fully decentralized assets, which is mainly just Bitcoin. That over time, central bank digital currencies I expect to ramp up. I think stablecoins, as long as the US allows them, are likely going to continue being here and being a big thing for a while. And unless someone can find a way to break Bitcoin, centralize Bitcoin, hack Bitcoin, which has so far gotten, more and more solidified over time, I think that's going to continue kind of taking market share and being kind of the baseline comparison. Every currency, I think, now has to be measured against Bitcoin, which is fully scarce, so zero terminal supply dilution, and globally portable. You can bring it anywhere by literally just memorizing memorizing 12 words if you want to, or writing it down or carving it in steel, whatever the case may be. You can self-custody these assets and bring them with you. And every currency has to deal with the fact that that exists out in the wild.
So there's Lyn Alden on her evolution from a skeptic to a Bitcoin advocate, with her journey mirroring the revolutionary path of Bitcoin itself. She's not only illuminated why Bitcoin is her top investment choice, but also compellingly argued why it stands unrivaled in the cryptocurrency sphere. Remember, this conversation doesn't end here. If you're keen to stay ahead in the crypto world, don't forget to subscribe to my daily 5-minute crypto newsletter. It's your gateway to the latest expert insights, breaking news, and top-notch on-chain analysis, all packed into a quick, informative read. Join over 20,000 fellow crypto enthusiasts by clicking the first link in the description and equip yourself to become a more informed crypto investor today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.